Good morning and welcome to the Axis Securities Market Minute podcast. Today is Wednesday, 8th of January and the time is 7:15 a.m. US stocks dropped with notable losses in the Nasdaq 100. The benchmark slumped 1.8%, the most in 3 weeks, after rising bond yields following strong jobs and business activity data fanned bets that the Fed will not cut at least until the middle of this year. The CBOE VIX climbed to 18, getting closer to the psychologically significant 20 mark, which is watched very closely by traders. Nvidia dropped more than 6%, its worst single-day fall since September 3rd, despite climbing to a record high earlier. In movers, the dollar index rose slightly, the US 10-year yield climbed to the highest since April, Bitcoin dropped over 5% for its first slide after 7 days of successive gains. Gold continued its advance within a large sideways churn since the late October record high, and oil recovered from its Monday losses as data showed that US stockpiles fell by 4 million barrels last week, potentially the longest streak of declines in 3 years. Back home, the rupee rose for the first time in 6 days as regional currencies rallied against the dollar. It eventually settled at 85.72, up 10 paise. In other news, the government lowered its economic growth projection for FY25 to the weakest since the pandemic, with estimates for GDP growth set at 6.4% through the end of March. Talking stocks in the Nifty rose 92 points in a day peppered with volatility. The India VIX fell 1 point, its biggest single-day points drop since 23rd December. 10 of the 12 NSE sectors rose, with media rising the most at 1.4% and IT down the most at 0.7%. Breadth was positively skewed, with more than 2 stocks rising for every stock that fell. ONGC was the best performer as it jumped 3.6%, while HCL Technologies fared the worst, dropping 1.9%. Speaking technicals, yesterday's candle traced a bullish harami, but for some investors, the long upper shadow may cause concern. Interestingly enough, for the NSE 200 universe, nearly 70% of the 27 stocks that traced popular candle patterns yesterday had a bearish flavor to them. Critical support for the market rests near 23,500, while resistance will continue to be offered in the 23,820 to 24,000 area. Coming to flows, and foreigners withdrew about 3,000 crores on Monday as per CDSL data. The month-to-date outflow stands at near 4,900 crores. On to derivatives now, and the Nifty's put-call ratio rose to 0.82 from 0.72, while the bank Nifties went from 0.7 to 0.73. 92,000 contracts of Nifty calls and over 400,000 contracts of Nifty puts were added, while implied volatility fell 120 basis points, which means that on a net basis, market participants created bullish bets via the sale of puts on the Nifty. The FII index futures long-short ratio went from 0.22 to 0.25 as expectations turned optimistic. Looking at options concentration for the weekly contract that expires tomorrow, the trackable range is shrunk to 23,200 to 24,000, with a notable addition at the 23,500 put strike and a significant addition at the 23,200 put strike. Meanwhile, volatility across the board fell compared to the day prior, with that on out-of-the-money puts falling more compared to similar distance out-of-the-money calls, in a sign that for today at least, demand for downside protection is missing. Looking at sentiment via net activity in index options, foreigners and proprietary traders are positioned for an advance, while retail traders are bearish. Looking ahead, the GIFT Nifty was flat. Asian equity markets were largely in the green, but notable losses were witnessed in Japan. Talking stocks, Graphite India, EID Parry and Sun Pharma were at horizontal support, while Federal Bank, JSW Steel and Imami were at horizontal resistance. CAMS, Dabur and JSW Infra were at trendline support, while Escorts, Century Ply and RCF were at trendline resistance. Speaking of key moving averages for the NSE 500 universe, 40%, 33% and 45% of stocks were above their respective 50, 100 and 200-day moving averages. ADP employment numbers, initial jobless claims and mortgage application data are due from the US today. That's a wrap on today's podcast. Have a nice Wednesday and we will talk to you tomorrow. Bye-bye.